Commodities. Okay, hello everyone, welcome joining. This is one of those first 1 or 2 minutes where we're just trying to make sure everything is working. So apologies for not going straight into the discussion. But thank you very much for participating in tonight's event hosted by Ask Gen Impact. Together, we currently have Ewan Copeland. Ewan, just wave so that everyone knows. Ewan. Into the stock with Jamie and Andre. And finally, we've got Curtis, pre-market.
Just say wave, so I'll say hello.
Right. So this is a very exciting event. So last time we finished the first event, we got a lot of good feedback and response. And hence, within the 2 weeks time period, we managed to get another great panelist. So the topic for the night is going to be around looking back to everyone's investing portfolio and journey back in 2020, and then provide a overview and outlook for what they feel excited about and what they feel like avoiding in 2021. So the format is going to be quite informal. I'm going to start with some of the questions, and then in the meantime, if you have any questions, there are two ways to ask them. First one is to ask them in the Q&A in this Zoom chat. And secondly, if you want, you can ask the questions to our Instagram channel if you wish. So without further ado, I will just start by asking everyone to briefly introduce themselves. I think the particular focus I want to have is to just talk about, firstly, who you are, secondly, how long you've been investing, and if there's anything in particular about your investing style, either long-term investing, day trading, large company, ETFs, anything that you feel like having as a quick introduction about you and your investment approach would be good. Should we start with Ewan, please?
Yeah, so I'm Ewan. I run the channel Ewan Copeland on YouTube. I've been making videos for about over a year now, on investing and personal finance and stuff like that. I've been investing for about 2.5 years. I started off using Moneybox, a very passive way of investing because I didn't really have a clue what to do. And then in the last year, I've become more active investing and looking at long-term investing, buy and hold, buy and hold, buy and hold. And that's me.
Right, should we now go to Curtis?
Yeah, hello everyone. I'm Curtis. I've been investing for probably around 3 years, but I was trading before that for a couple of years as well. So in the market, probably 5 years, but investing long term, I would say 3 years. And I run pre-market. It used to be called Infant Investors, but recently the name changed to pre-market. And my strategy has changed also. It used to be more value investing, so trying to find businesses that were safe, not really doing so well, buying them at a low price and then hopefully seeing them turn around. But then it changed to more growth stocks. So I'm a mix between growth stocks and swing trading, I would say. Yeah, that's me.
Okay. Andre?
Hi, yeah. So I'm Andrea and he's Jamie, and we're into the stock. We started investing about in February 2020. So just before the first lockdown in the UK. And that's when we found ourselves kind of in a tiny London flat and with loads of time in our hands. So we thought, let's give this a proper go. Let's research quality companies and let's document that research on Instagram.
And it was perfect timing in February, 1 month before everything all went downhill. But I think we've learned a lot. And in terms of, I guess it's both of our general approaches. It's probably more growth stocks. But I think something that we mentioned the other day is, we're looking for growth stocks, but we're looking for ones where there is still some value, where it's not just the hype stocks are getting carried away, way beyond the fundamentals. And similarly, we still try and look for some value stocks, something to trade closer to their intrinsic value, but again with growth potential. So it's probably growth. It's a mixture, but mainly growth.
Yeah.
Okay, very good. So I think the next follow-up question on that, and perhaps just to set the scenes for all that are listening, if you look at your portfolio breakdown today, in terms of your country allocation, your split between stocks, single stocks, ETFs, or large caps, small caps, sectors breakdown. So just to set the scene so that everyone kind of have a bit of context when we go into the next couple of questions, so that they understand where you come from, perhaps it will be useful that you talk about how's your current allocation of your portfolio in terms of country, sector, styles, and different attributes. Ewan?
Yeah, so half, pretty much, I think it's around 50 to 60% is in ETFs. So mainly in the S&P 500, and then I've got the FTSE 100 as well, but a lot smaller weighted, just purely because sort of the Warren Buffett method of sort of picking the whole market, and then the rest is in individual stocks, primarily in America, with a few smaller holdings in UK companies as well. So the potential, well, we'll see what happens, but I'm quite happy with how it's going so far.
And what about sectors, if any?
So a mixture of a few. Majority, I'd say tech, but I think my biggest holding is Disney and Coca-Cola, or my two biggest holdings are Disney and Coca-Cola. So sort of well-established blue chip stocks. So I'd say, yeah.
Okay, Curtis?
Yeah, so I'll probably break every diversification rule out there, to be honest. I'm all in stocks and they're all American. I used to have a lot more British stocks, and I used to have ETFs as well, and like ETF tracking bonds and so forth. But I think I just learned the type of investor that I am and what I want to see. And I just felt that I'm more aligned with the US market. And I feel that because a lot more money goes into the US market, the opportunity for growth tends to be higher than other regions. So it's just felt kind of natural and easier for me. So I'm 100% in stocks. They're pretty much all technology, but I don't really see technology as sort of one sector. I kind of see it as it goes across sectors depending on what the tech purpose is. So for example, if I invest in Open Door, then it's kind of retail at the same time as it's technology. Whereas if I invest in Lemonade, then it's finance at the same time as it's technology. So I think there's hybrids in terms of other sectors, but I would say largely it's tech with different skews on other areas as well.
Interesting. Well, I think Ewan mentioned this briefly, but speaking about your top holdings, if you can review, what are your top holdings to us?
Yeah, my top holdings, I would say for the long-term investment portfolio, because I have two, would be like Cloudflare, Arrival, which is actually a British company, but they listed on the NASDAQ. So I think technically they're seen as a US stock, even though the foundations are in the UK. And I would say Open Door, they're my top three, and actually Tesla, because it's done well. So they're my top four holdings, I would say. If we're talking long-term investing, if we're talking my midterm stocks, then they're more speculative penny stocks, which I'm probably not going to mention on here, just in case people lose money.
All right, Andre?
Yeah, sure. So my personal portfolio actually mirrors the Into the Stocks portfolio. Like we really do put our money where our mouths are, so to speak. And I'm very keen on clean energy and electric vehicles, actually, and mainly American stocks as well. So my top holdings would be, the iShares Global Clean Energy ETF, which is, to be honest, the only ETF that I'm holding. So sorry, Ewan and Warren Buffett. But yeah, and apart from that, I've got NEO, and NEO is one of my top holdings purely because we bought it back in August when it was around the like $14 mark, and then it skyrocketed. So yeah, now I'm just stuck with a large portion of it. And also I've got Tesla, which is one that we actually personally debate a lot.
We have slightly differing views.
Yeah, slightly different, more like opposite.
Yeah.
Yeah. And I'm actually very much into fintech as well. So I own Square and Stone. Stone is a really good one that we really believe in. And yeah, and I even own a little bit of Bitcoin. It's not, it's kind of speculative, and it's definitely not one of my top holdings, around 2%, but I just felt the need to put that out there.
Okay. Jamie?
Yes, so I mean, we do have fairly similar portfolios, bar a few. I actually only have 11 investments. So my approach is very much to do quite a lot of research into a company and be 100%, oh, well, not 100%, but yeah, be quite confident before investing in it. And, you know, look at the company and look at, you know, does this look prime for success? My top holding, I mean, my split, I probably have, sorry, we're looking through our trading 212 accounts. Yeah. I've got probably about 15% in UK stocks, 12% in German stocks, well, it's 12% in one stock, which is my top holding, HelloFresh.
Okay.
And then 10% in the iShares ETF, and the rest all in US listed stocks. And again, it is probably a very tech focused portfolio, but I like how kind of Curtis described tech as being, you know, as being a hybrid of all these different industries that are being taken over, are being impacted by tech companies. So companies such as, you know, Square, Stone, Chewy, Teladoc are all kind of really exciting companies that I like.
Okay, sounds interesting. I think that naturally leads me to the next question, which is, and this is an open-ended question, so please feel free to raise your hand and chip in, which is just looking out for 2021 or even beyond, any particular areas of the markets you feel very excited about. I know, Andrea, you mentioned about clean energy, but any other areas that you feel very excited about? So that's it can be sectors, it can be different themes, it can be countries. So whatever that you feel most excited about, or potentially you haven't had that in your portfolio, which is something you'll be looking actively towards to. So that's an open question. Any first take on that?
I'll go. So I agree with Into the Stock about clean energy. I think currently the trend, I don't think it's a fad. I think it's, you know, we're at the beginning of a major shift. And I think a lot of people that are getting into investing care more about their ethics as well as just making money as well. So I see it as a long-term thing. So not just 2021, but obviously beyond. I like looking at enablers as well for different sectors. So as an example, EV enablers. So not just cars, but things that enable cars to sort of, you know, be there. So batteries, LiDAR companies, recycling, minerals, anything, semiconductors as an example, all of the kind of bits and bobs that go into the actual vehicle, I think is quite big for me personally. One area that I think will be big, but I don't really know too much about, is genomics. But I'm trying to learn that space as much as possible. Currently, it's, I think, out of my competence area, but I think that is definitely going to be one that's going to be emerging. So those are my big three, would be like EV, genomics, and clean energy.
So I'm happy to go next. I think there's one area that I was actually talking to Andrea about the other week that I've been avoiding for the whole of this year, and start to feel a bit more comfortable investing in 2021, and that's stocks that should rebound post-COVID. So ones that have been hit quite hard, but that should come back. So I think, you know, probably in the middle of 2020, you know, I know a lot of people were wanting to invest in cruise lines and airlines at these really low prices, but I felt at that point there's still too many question marks. There's still so many unknowns, and it's still quite hard to see, which companies are strong enough to survive this, or to at least survive it in half decent shape. But now, as we kind of move into 2021 with all the vaccine rollouts, and with companies having endured this for 9 months, I think that now I feel comfortable looking at companies and saying, okay, they've been hit quite badly, but actually they're strong. They're still going to be required in a post-COVID world, and you could be looking at a bargain. So, I mean, one example of one that I've invested in recently is the National Express Group. So I think they're a solid looking company, and they've had very strong growth over the last 5 years. And yeah, their share price has halved, I think, from its pre-COVID peak. So yeah, for me, that's one I'm quite interested in.
Okay, very interesting.
I'm not convinced. I'm not really sure how. Let me rephrase that. I'm not convinced that we've seen the full impact of this on the financial or on companies, because of furlough and stimulus checks and stuff like that. I don't think we've seen the full impact for these companies, because I think they're all being held up, and we don't really know what goes on behind closed doors. So I'm really sort of not against, but like, I'm not going to be investing in these companies because I know there's a potential risk of them just completely disappearing. So I think that's where I'm at in terms of the immediate future anyway. But in terms of clean energy and more responsible investing, I'm definitely need to look more into that. Like originally, as I started off, I saw companies like Coca-Cola, which is obviously like a decent, solid, been around for billions of years almost. But they apparently the biggest producer of plastic, which makes sense because everything they sell is almost plastic. And that's not something I sort of thought about before. So that's just something I'm going to be considering and thinking about, like how can I get involved in the sort of helping the environment as well as investing in the companies that are doing so.
Okay. But any other areas that you feel very excited about, Ewan?
Not really any other than the ones that they've already mentioned. So I do think that electric vehicles are headed this way, and to the UK especially. Obviously you see Teslas in some parts of the world, but not some parts of the UK, but not necessarily everywhere. But I think that's definitely a change that's going to be very quickly adopted in the UK, I think.
Okay. Andrea?
Yeah, so obviously I already mentioned the clean energy and the electric vehicle industry. I think those are two really exciting ones. But Curtis actually reminded me by mentioning genomics of ARK Invest. So for those who don't know, ARK Invest are an investment managing firm, and they focus on innovation, on very disruptive companies. And they have these ETFs, so basically portfolios, focused on different industries. So one is genomics, like Curtis mentioned. And then they've got other ones like fintech, or 3D printing, or electric vehicles even. So I think those are really exciting industries for the future. But I was also looking at their report that they released probably a month ago about big ideas of 2021. And one of them that really caught my eye, even though I'm not into like tech or programming at all, is deep learning. So apparently this is kind of like the tool that TikTok uses in order to kind of get you hooked and to suggest like videos to you. And that reminded me actually, because we had a conversation about TikTok with Molly from the Genuine Impact team before this panel. So that reminded me how well TikTok are doing because of this technology. And I think it's one definitely worth looking into.
Very interesting. This might be a very well, not very, slightly controversial or debatable area. Any areas of the market you completely dislike and you think will disappear if you have such strong conviction? But I think it's a quite good debate to have between COVID losers, can they rebound or can they possibly disappear? But any other areas of the markets that you personally feel very against to, and you will never put your money to, and even though you can't really short these companies being a retail investor, but if you could short them one day, what would those areas of the markets be?
I'll go first. I personally would never invest in like a cigarette company or anything like that, purely because I have lung disease, and just obviously we know that it's not very good for you. And also oil, I'm not convinced. Everyone's still telling me that oil is going to be around for ages, but I don't think that people are going to allow it. Like everyone, especially our age people, are more conscious about the environment, etc., and what comes with that. So oil obviously cannot continue depending on how we sort of adapt to that, really.
Yeah, I agree with the oil, definitely. I don't see that making some kind of great resurgence.
Yeah, you don't want to really invest in a declining industry, do you?
But yeah, I think the thing that I'm about to say is probably gonna, it may upset a few people, but I would not go near Bitcoin. I would.
I would, apparently.
Well, yeah, you missed a little bit, but I would not. No, I think that the blockchain technology is fantastic. I think my general opinion, and I know that the thing with Bitcoin is you can make such strong arguments, I think, both for and against it. But I think just my personal view is that if cryptocurrencies did become mainstream, I don't think governments would necessarily embrace a decentralized currency as a form of legal tender, if you like. My opinion is that governments would work on creating their own cryptocurrencies, and that would be the one that people would choose. Again, I know that people will talk about Bitcoin as a store of value, but personally, if Bitcoin suddenly got wiped from the earth tomorrow, I think that all you would have is unhappy Bitcoin investors, but that would be it.
Watch out for your DMs later.
Yeah, I know that's a yeah, that's an unpopular opinion.
Okay, Curtis, anything?
Yeah, I'd have to agree with you, and I think I would go along the line of ethics. So I wouldn't invest in, although I have historically invested in a cigarettes company, I wouldn't do it again. I wouldn't invest in like gambling or an alcohol company. So yeah, I think that's probably I don't think there's any specific sector that I wouldn't invest in, but I think there would be companies in certain industries that I probably wouldn't invest in.
Interesting. Before I ask my next question, just so everyone here is aware, you can ask your own question in the Q&A part of this Zoom call. So after I finish some of my questions, I will start to funnel your questions in to each of the speaker. So please do ask your questions in the Q&A section part, and I will later take a look at them. Right, so my next question, which is slightly related to the things that we have talked about, when you discover new ideas, when you conduct research. So for someone who's new to investing or who doesn't really have a lot of time every day to learn about investing or learn about markets, what are some of the tools that you use to help you become more informed and more efficient? Gen Impact should not be included in the answer, by the way, just for full transparency reason, even though you do maybe. Right, any taker on some of the research tools that have helped you become much better and much more informed than the past?
Yeah, I'll go. So I recently have been doing a series on my YouTube about ARK Invest. So what Into the Stock talking about a minute ago, and I have been looking at what they've been investing in as a way to sort of see what direction they're going in. So they obviously have to release what they've bought in the month and what they've sold in the month. So I've looked at a few that when they've bought more than they've sold, I've had a look to see why, and gone onto that specific that specific company's website, gone through their financial statements, seen what they do as a company, how they're planning to basically make money. And I think that's a really good way of doing it, because obviously these people, Kathy Wood and her team, they've done pretty well in the last couple of years. So it's safe to say that they sort of have an idea of what they're doing. So it's definitely a good way of sort of investing. One of my videos is invest like a pro. So if you emulate the people like a hero, so if you're emulating in football, you emulate Messi, in rugby or whatever. So it's sort of, that's my strategy at the moment. And I think it's working quite well for me.
Yeah, for me, there was kind of two parts to your question, Truman, so I'll kind of split my answer. But in terms of what I've historically done and what I do now, I used to use Simply Wall Street. So when I first joined Free Trade and started investing, I literally went through all of their stocks and just researched all of them just to kind of see what information came out. And then that's how I sort of decided what I wanted to invest in. However, as I became more confident in the market, particularly around long-term investing, I found it just became easier to find the stuff that naturally gravitated towards my interest. So I tend to now just read a lot of articles. That's my main approach. Like I read probably like 20 to 30 articles a day on anything. And then through that, I might find something that piques my interest. And then I follow that lead onto something else that piques my interest. And then eventually I might land on something that is now going to be an investment that I take into my portfolio as well. I also think one of I don't know if this is a benefit or a curse of having a channel or Instagram, I think Into the Stock, and Ewan can relate, is people send you stocks all of the time. What do you think of this stock? What do you think of that stock? What's your thought of that stock? And I probably go through 50% of them to actually do the review, but half the time when I do it, there's actually some gems in there that they actually send to me. And then that actually sometimes, once I do my own due diligence, that actually becomes a stock that I invest in as well. So I think naturally, that's also an opportunity. But I think for everyone out there, I would say Simply Wall Street was quite cool. Yahoo Finance, I personally think is the best free tool out there. And then, yeah, there's loads of other things that you'll find on Google as well.
Yeah, I mean, completely agree with Yahoo Finance and Simply Wall Street. I mean, Simply Wall Street is, for me, it's like a little gem that we found as well. So they're both very useful apps. And yeah, just kind of scrolling, we do listen to podcasts, we do read articles as well, but scrolling through Instagram is where we have sometimes found some of the lesser known stocks that, that some of the accounts have come out with. And then, we've researched them and been like, oh, wait, this is a solid company. But I mean, what we will mainly do, maybe it's the accountant in us, but we'll go to the company's investor relations page. We'll look through the financials. We'll look through the detailed report. We've actually just on Monday. On Monday, we launched a Patreon page where basically we put together these 8, 9, 10 page company reports, because I think that, for us, one of the issues is that as an individual investor, it's very easy to do either not enough research, so read a Motley Fool article and then be like, okay, yes, I'm putting my life savings in that, or to have to, scour the whole internet to try and get a good understanding.
We've been in both instances.
Oh yeah. We've done both. We've been down both paths. So we're trying to do that, half in a selfish way because it benefits us, makes us properly research companies, but hopefully that will help anyone else as well.
Okay.
From the ones I read, they're very good from the ones I read.
Thank you. Yeah, we sent you and a couple just to get his view. No, appreciate it.
So I think this comes to interesting point to talk about, which is what's the right balance between doing enough research to actually buy or sell something versus, oh, I don't know what I don't know, so I will never action on something I like to do. So what would you suggest to someone who has their day job in terms of, oh, this is the amount of work you need to put in if you want to manage your own portfolio, or if you don't want to do all the hard work, you can just choose a simple ETF to put your money into. So what would you suggest to those people who don't really have the luxury of the time and hours like you do every day?
I think you can always go with the 80-20 rule, really. So if you put, if you find it too time consuming and you don't particularly enjoy looking into different companies, as we do, because we're weirdos, then just get an ETF that tracks the market. So the FTSE 100, the S&P 500, or whatever you would like. And then maybe for the rest of the 20% of your portfolio, just find good companies that you like, maybe companies that you find in your day-to-day life, like really big brands like Coca-Cola, right? You cannot go wrong with that. Or Apple, for example, or Amazon, I don't know. And then, maybe start with that, look into them. And if you find something that really that you're really passionate about, or if you find that you like researching companies, then put more work into that.
And takers?
Yeah, I think that's a really good point. From my perspective, I think if you don't want to research and you don't like researching, then I think you just need to go with ETFs. And one thing you could potentially do is when you look at an ETF, they will always list their sort of top 10 holdings. And then maybe you could look at some of those as starting points to get your individual stock picks. So if you was to look at the top 10 holdings for S&P or SMT or any one of these like popular funds, you might get some inspiration to find some good holdings for yourself without having to do too much research, because the ETF you wanted to get holds that stock. So I think if you're not interested in researching, that's potentially a way to go. But I would try and encourage people to do some research, even if it's just watching YouTube videos or following certain people on Instagram, even if it's just 1 or 2 accounts. But I think the more you start to understand the mechanics, then I think it's going to better you long term. And if your goal is to make as much money as you possibly can, then I think it's actually important that you do give yourself the opportunity to do that and give yourself some time. So I think it depends on what you can do. But I would say, if you don't want to, ETFs, look at the top 10 holdings. If you do want to, follow some people and then sort of take their recommendations and then research them.
All right, very interesting. There are quite a few questions coming in from the audience, so I'll pick some of them. First question is on commodities, if anyone has a strong view on that. So the question is, nobody has ever mentioned about commodity investing or companies focused on certain commodities. I think the question excludes gold and silver. I assume he's talking about copper, iron ore, and all those other things. So what are your views on commodities, if there's any? And feel free to share your views on gold and all the other precious metals as well.
I think it's a really interesting question, because I mean, in our instance, it's certainly applicable. I think for me personally, I feel like if I look at a company, if I look through its reports, if I research a company, then I can do a pretty good job of understanding that company. But if I look into commodities such as gold, silver, copper, I don't know. For me, there's almost less that distinguishes them. So when I look at a company, I can kind of see, okay, these are their USPs. These are what's going to drive them forward. When I look at gold and silver and copper, and this may just be due to the fact I've never looked at investing in commodities, but I don't see, it doesn't come as obvious to me, kind of like, oh, this will drive the price up, this will this will improve it, and this will make a good investment.
Yeah, I think from my perspective, it's quite similar. I would say that the reason why I prefer stocks is because they produce income, and you can quite easily, judge a business on it. Whereas with commodities, it's more about the price, someone or an entity is willing to pay for it. And I think that's harder to judge as a new investor to work out if it's going to be a good investment long term. However, I think there is a hybrid. There is a bit where you can be in the middle. So for example, I've invested in gold mining firms where, the price of gold naturally benefits that company, but also the fundamentals of the company also benefit it. So it's kind of a bit of a hybrid if you did want to get a bit of exposure. And recently I put in a very small position in a lithium company. So lithium is a mineral, but I know that mineral is going to go into batteries, and batteries are going to go into cars, and cars is in the EV sector. So if you just follow the supply chain, you're investing in a commodity, but for the purpose of something that you understand going forward. So I think there are ways to get around it, but I don't really just sort of wake up and think, oh, I want some sweet corn today, or I'm going to, buy some cocoa beans or whatever. Like I have no idea. I don't drink coffee, and I just, have no clue about that. So I'd rather just stick with what I know, basically.
Would you mind revealing what are the gold and the lithium companies you hold?
Yeah, so the gold company was Centamin. They're a gold mining company. And again, it was mainly because of the balance sheet and the way that they're actually run, and the mine that they had within Egypt. And then the fact that they obviously benefited from the gold rising, particularly in, over the past couple of years, the climate's not been that great with everything that's gone on. So there was a good benefit there. The lithium company is a smaller company called Lake Resources. So they're an Australian extraction firm, and they basically have mines in Argentina. And Australia is responsible for like half the world's lithium supply in terms of production, and Argentina is responsible for like 10% of it. So they're sort of well placed to get, high quality, high purity lithium, which is going to then eventually go into batteries. So yeah, those are the two companies that are sort of commodity related that I've invested in recently.
Very interesting. Right, so the next question is on video gaming industry. So the question is, what are your opinions on video gaming industry? If there's a strong opinion on that one, any takers?
Yeah, I'll go. So obviously the gaming industry and esports and stuff has obviously risen loads in the last year because of everyone being at home. Personally, I played a lot more than I have been. Probably should have been, but let's not get too much into that. But I think this is another thing. I'm not sure how well it will continue on when everyone can go outside and go to travel and stuff like this, because I think after a year of everyone being inside, a lot of people want to just leave the country, travel. So I don't know how. I know that's not necessarily. It depends which part of the gaming market you're talking about, but that's another thing. I don't know where it will be in 5 years' time. Be interesting to see though.
Any gaming companies you have or interested in looking at?
I haven't actually got any. I know there's a good ETF on Trading 2 and 2. I can't remember what it's called, which tracks some of the American companies that do the esports, and that's getting bigger and bigger every year. So there's big potential.
Okay. Any other takers?
I don't know if you're trying to talk about GameStop secretly, Truman, if you're considering that a gaming company, but I'm not going to talk about GameStop at all. But no, I think the industry as a whole, I think there is a bit of what Ewan said. I think he's spot on that. I think people there might be a short-term dip where people just kind of want a bit of freedom, but I do think the industry is definitely here to stay. I think esports is going to continuously grow, and so I definitely think it's a big opportunity. Whether it materializes the way that EV or renewable energy will this year, I don't know, potentially, but I think long term, if you're talking 5 to 10 years, then I think it's definitely going to be a big space for sure.
Yeah, I was more thinking about some of the traditional names like Tencent or Activision Blizzard, not some of these highly speculative ones, which I do see a few questions are asking about that area, but I'll get onto that later. All right. So the other question is a combination of ARK Invest, their approach to disruptive technologies, and the space sector. Anyone has a particular strong view on the whole space sector, space travel and exploration?
So I am, it's shot up in recent days to become, it was my top holding until I trimmed my position slightly today, Virgin Galactic. So I guess it was one of the first pure space plays that was out there. But yeah, I think that the whole side, like the commercial side of it, will probably have a limit somewhere, but the kind of it's like high-speed intercontinental travel that they're looking at is very, very interesting. Getting halfway around the world in a few hours, I think that is something that they in particular should succeed in. And I know that when you were looking at the ARK Invest, they had a whole slide dedicated to space.
Yes, so part of their big ideas of 2021 was space exploration. And obviously one of them is, the commercial activity, getting people to, I don't know, the moon, Mars, wherever. And that's like the most exciting part of it. But the hyperspeed travel, I think that should be probably the most lucrative and the most revenue generating part of it, which is like why we're quite excited about Virgin Galactic as a stock in particular.
Mm-hmm. Okay, so the next question is about the constant debate between growth stocks and value stocks. I know, Curtis, you mentioned you started by being a traditional value investor and now you're more switching to growth. So the question is, what is the best balance between growth and value stocks in a portfolio?
Yeah, it's a very good question. I think there's less, I don't think there's a uniform answer that there is, 50-50 or 70-30. I think it all depends on the individual. Like one thing I tell people all the time is you need to understand your risk appetite, because if you understand what level of risk you're willing to take on, then I think it will, strengthen your conviction. So because I know that I like to take risk in the hope of getting a bigger reward, then for me it's like 100-0. But for some people, it might be 80-20 or 50-50, depending on what they're sort of looking at. So I think the most important thing for me when I speak to anyone is understand your own risk appetite. Some people, don't like risk. The moment they see 5% of red, they're panicking. Whereas others can just add more money freely and it's not really that big a deal. So that is kind of the thing I would say about growth versus value. It's kind of know what risk appetite you want.
Any other growth value lovers?
So obviously from what we've spoken so far, we're more growth investors, but I think that's also got to do with one's age and like time horizon. So obviously, Curtis mentioned the risk appetite, which is very important, but I think as a young investor, I can afford to take on more risk now. And then as I get older, I'll probably shift towards a more dividend focused, kind of like value focused portfolio. If that makes sense.
That's very interesting. Yeah. Ewan, Jamie, anything to chip in?
Yeah, I mean, it's basically that, if your horizon is 10 or 20 years, you can afford to, as scary as it might be, and it all depends on the individual, you can afford to invest in a growth stock that will drop 50%. But that it might take 5 years to recover, but then, end up being up 200% from your original investment. Whereas if I'm looking to withdraw my investments in the next year or two, it makes sense to go for a cheaper stock because it's likely to be less volatile and less likely to drop so significantly. So I think that's
and I guess it also depends, like if you want a constant stream of income. So like if you want the custom dividend be given to you rather than you just like selling the stock to get that money.
Yeah, since most of the growth stocks out there don't pay dividends.
Yeah.
Interesting. Yeah, so the next question is the bubble talk. So everyone, all the time people talk about the bubble is coming, and it's about to burst. And people have been talking about that for the last couple of years. So do you think in any time soon that the market will tank? And are you now loading up cash to average down if that happens?
So, I mean, my opinion on this is just that who knows? I mean, you know, no one does. I don't think, you know, you can have all the experts that will probably say on a weekly basis that we're in a bubble that's ready to burst. You know, I think I've been probably reading that for the last 6 months. The truth is, it's very, very difficult, very difficult to tell. I've been reading One Up on Wall Street recently, and there's a quote from it that it's something along the lines of, you know, it's very easy to make the intelligent argument for a market crash or for a stock to go down. It's very easy to, you know, talk about that. But yeah, it's very hard to tell. It's very hard.
You both are still on the risk on mode. You are still taking on risks.
I mean, our general approach to investing, because we put our salaries in there on a monthly basis, is dollar cost averaging. Yeah. So, you know, if I were to, you know, if I had 50K sitting aside and thought, and was planning to put that all into market at one time, I would be nervous seeing the market having, you know, risen so much over the last 10 years. I would be nervous that, oh no, what if this is a, you know, repeat of 99 or whatever. But I guess, yeah, from us personally, because we just top up every month, it's less of an issue, because we're like, okay, if the market crashes, we'll just keep topping up.
But as a rule of thumb, I do always try to keep a little bit of cash in there just to take advantage of any dips in the market. So, yeah.
Well, hopefully, as your Twitter says, next year this time you'll be a millionaire.
Yeah, that's my Twitter bio.
Ewan and Curtis, any thoughts on market crash theory?
Yeah, so I saw a tweet the other day, which was from some trader, an investor or something. He said, when everyone's talking about a bubble, it's likely that it's not a bubble. It's when you least expect it to pop. So my strategy is long term. So if it does crash, then I will just continue putting more money in. I'll find money wherever I can find, under the sofa, under my bed, and just be pumping it in. So that's my idea. As long as my companies haven't fallen off a cliff, then I'm happy. I'm happy with that, because it will just get me closer to my goal quicker. So, or hopefully.
Yeah, I fully agree. I think even if you think about the COVID crash last year, you know, if you actually look at the numbers, it was, you know, just as bad or worse than the Great Depression of 1929. So, and then the market recovered a month later. So I think everything is temporary. There will be crashes and there will be bubbles. You can't really predict it. I think you just got to think long term. And if you are thinking long term, then it's just a part of the cyclical nature of the market, where it rises and then it falls, it rises and it falls. But long term, it will continue to rise. So I try not to worry about it too much and just keep on investing. If obviously a bubble does, if it does hit and everything starts to crash, then I will try and, you know, just continuously add into the positions that I feel very, very strongly about. If there are ones that were more speculative that maybe I didn't feel as strongly, then I might sell those ones. But generally speaking, I will just ride it through and then obviously get through the other side. That's kind of the way I would approach it. I think it just depends if you're thinking long term or not, is the main thing.
Interesting. Right, in the interest of time, 2 more questions. The next one is, what are some of the mistakes you've made, if you've ever made any mistakes so far? And I think a generic question from that is, any advice you would give to a new investor who's going to make some of the mistakes but you wish that they can avoid making them?
I might start on the mistakes one because I'll make a lot. And into the stock, just talked about Virgin Galactic, which is my most recent mistake. I just made a video about it yesterday, selling it too soon. So yeah, I would say the biggest mistakes that I've made is one, being emotional. So I think you have to try and remove your emotions when you're investing completely. And ideally, if you can, if you're thinking long term, not even really look at your positions, maybe look at them on a weekly or a monthly or a quarterly basis, whatever sort of suits your personal style. But if you're looking at it on a daily basis, I think it's naturally going to make you make some incorrect reactionary decisions, which is never really going to be good. So I would say not being too emotional. I'd also say, which might be controversial, listening to too many people as well. There's so many voices out there on the market, and a lot of the time there's conflicting information, and so then you don't know, who to listen to or what to sort of do. So I would try and avoid that as much as possible, and just pick like 2 or 3 people that you trust, that give steady, reliable information consistently, and just sort of just run with that. That's probably another thing that I would say. But also I would say make sure you have a goal, because if you have a goal on what you're trying to do and what you're trying to achieve, then everything kind of aligns to all that. If you're just putting money in the market aimlessly, just hoping it goes up, then I think you're naturally going to make some not so great decisions. So yeah, that would be my points.
So I own up to a mistake. So I thought that Tesla was overvalued when it was at about 700 euros, $700, and so didn't buy it. However, this was $700 before the stock got split into 5. So right now the stock's at about $800, which if I had invested, probably would have been a 500 or 600% return. So I still think it's overvalued, but hey, if I say it's overvalued, it will probably shoot up.
Just like what Ewan said, if someone tells you there's a bubble.
Yeah, that's probably, I think that's one of my biggest mistakes.
Okay.
But even if you do that, right, or even if you don't take advantage of like an opportunity in the market, just know that it's okay. Just know that it's okay, and you'll find more opportunities. There's plenty of good companies out there. They're not called Tesla. And you can always kind of like start investing and find a good company or buy an ETF and accumulate wealth over time. So, just do you. You're not in a competition with anyone. Just try to focus on your kind of like personal financial goals, really.
Yeah, so I would say my biggest mistake was not starting sooner. So I think, although I started fairly passively, I think if you want to start learning about it, just get something that's passive. You can just start getting to the habit of investing every single month, and then do your research as you progress. And then you might realize that you don't want to do your research and just continue doing passively, but you've already had that habit to start with. And then, yeah, if you do end up researching companies, then you've got that good sort of background and start into doing it. My mistake to begin with, another one, was when I first opened my Trading 212 account, I decided that Barclaycard was a good company, and then it dropped like 5% the next day, so I decided to sell. So it wasn't, luckily it was only like 100 quid or something, but I haven't sold anything since. So that's my buy and hold strategy coming in there.
Okay, interesting. Final question of the night. Looking for 2021, if you can give a one-liner to whoever is following your content, either Instagram or YouTube or other channels and platforms, what is the one-liner you give to those who are invested in the stock markets?
So I'll steal my one-liner from Peter Lynch, and use his quote. It's something along the lines of, know what you invest in and why you invest in it. Because if you know that, the share price doesn't matter. If you do that, then the share price drops and the company stays the same, you don't panic. You think, okay, it's the market. So yeah, that would be, I think, my one-liner. Okay.
If you know what you know, that's the prerequisite.
Yeah, so it's, you know, I think when you're investing in a company, know what you're investing in. So don't, for example, genomics was mentioned earlier on. I love the idea of it, cannot get my head around it. So for now, I won't invest in it. So as long as understand what it is that you invest in and know why you're investing in it, know why you think that company will succeed. Yep,
very true.
Yeah, for me, I tell everyone do your deal, which means do your own research. I think, you know, me personally, I don't really, I sort of trust my own research. So even if I'm wrong, I'm happy to be wrong with my own ideas than be wrong listening to somebody else, if that makes sense. So I just think people should do their own research and trust their gut as well. I think often, you know, when the right thing is to buy, you know, probably when it's right to sell. You might not do for some outside external reasons, and then, you know, you regret it later on. So I would say trust your gut, do your own research, and I think, yeah, over time it will definitely benefit you as well.
I would say don't buy the hype. Usually once the hype has already happened, you've already missed the boat. So with a thing we're not going to mention, obviously, if you're investing last Friday, then you've lost money, haven't you? So that's all I'd say.
Yeah. Andre?
I think I'll probably say that, well, as cheesy as it may sound, the only competition that you have is yourself. So try not to look too much at how other people do, how your mates may be doing with like the stock, which shall not be named in here, or how other, I don't know, professional money managers are doing. Just know that it's about you and your personal financial goals, and, you know, just let kind of the magic of compound interest happen, and, you know, just accumulate wealth.
Okay. Yeah, very informative. Okay, I think that concludes the whole night. So as a final note, thank you very much for Ewan, Andre, Jamie, and Curtis for your participation and insightful knowledge. And also thanks for all the attendees. As a quick admin, we'll be producing a video and we'll be sharing that across our platforms. So if you missed tonight, or if you are only listening to part of the conversation, you'll have everything ready for you tomorrow. Our next panelist discussion will be in 2 weeks' time, where we're going to talk about impact investing, diversity, and inclusion. So it's going to be another great lineup of panelists. So it's going to be in 2 weeks' time on the 17th of February, if I remember the date correctly, but it's in the Wednesday in 2 weeks' time. So thank you very much for listening, and wish you a good night. Thank you all.
Thank you.
Thanks, everyone.
Thank you.